Commodities over the weekend, we saw oil prices gaining on Friday as U.S. buyers covered positions ahead of the three-day Memorial Day weekend, the unofficial start to summer, amid concerns over the latest round of nuclear talks between the U.S. and Iran. Brent crude futures rose 0.5% to $64 a barrel. Copper jumped 3.5%. Iron ore fell to below $100 a ton. And gold surged on Friday as investors sought the safe haven asset amid those renewed tariff threats from the president in the United States. Gold futures settled 2% higher at $3,365 an ounce. So setting us up nicely for the next conversation, Brian Chu, founder of the Australian Gold Fund, joins me now. Brian, nice to see you. Thank you so much for joining us. So when you think of the key dynamics pushing the price of gold, yes, it has a lot to do with the safe haven status. Where else can we look for indications as to where the gold price will head?
Thanks for having me on that, Nadine. Besides the US dollar, besides safe haven status, I would actually look at gold as the alternative money to the US dollar, because the US dollar is currently what we price everything with. So you could say the US dollar is actually not what we call a stable unit of account, whereas many people think it is, because they look at dollars, they look at all sorts of currencies, and they go, well, we're pricing everything in dollar terms or the domestic currency, and we don't notice what happens behind the scenes. Whereas if you look at houses, you look at groceries, property, etc., you go, well, apples have become more expensive. Properties, they've gone up. But what people don't realize behind the scenes is that all currencies have actually been declining in value in especially the last 15 years, since the subprime crisis and zero interest rates is the zero interest rate environment. So when they say gold's going up, for example, they think that, oh, gold's could become more expensive. But in my view, it's not that gold is any more expensive than it was, unless we're actually been in a bubble, just as we've seen in 2011 when gold really did bubble, and it came down about 20-30% in the space of the next 3 or 4 years. What's really happened is we've just watched currencies debase continually, and everything else has actually gone up. So that's actually how I would look at the value of gold. It's more the currencies are falling in value, and that's why the prices have actually gone up.
So if we continue to see pressure on the US dollar, what then happens to the price of gold?
Well, if we look at what's happened with the US dollar index since the beginning of the year, it's actually been coming down. And even though it's gone below 100, it's now 98. And some people are saying that the US dollar should be primed for a bounce. That's possible, except for the fact that we're watching the US economy under the Trump administration. They want a weaker US dollar to revive the domestic manufacturing and also improve their trade competitiveness to the rest of the world. So I believe that, number one, you have the Trump administration wanting to have a weaker US dollar. You have the Federal Reserve, who is now pushed to the corner to actually cut rates, even though they had predicted that the Trump administration would increase inflation. They're actually quite wrong at the moment. We're watching inflation slow down, and they are going to potentially reach about 2% year-on-year CPI increase, which is the line in the sand that the Federal Reserve had drawn themselves in to say that they're going to cut, they should be cutting rates. So all that type of mechanism that's happening suggests to me that gold in the short to medium term could continue to rise, even though it's been on a very strong rising trend since about September 2022, when it bottomed at $1,600 US an ounce. We're currently at 3,320 as we speak.
So what you're saying is that if the Trump administration, looks to revive manufacturing, looks for a weaker U.S. dollar, could it potentially start to subsidize some domestic businesses? Could that lead to some sort of an economic recovery? And then what happens?
That seems to be what the Trump administration would like to do, is to subsidize the domestic industries, encourage businesses to return to the U.S. And he seems that it's not just President Trump, really. A lot of people, I think, mistaken it for he's the one-man team, but he's got a lot of advisors behind him. And I think their strategy is to achieve what many experts at the moment deem impossible, which is, number one, to deal with the runaway U.S. government debt, to revive a manufacturing economy that is where labor costs are actually much more expensive than the current key manufacturers out there in China, in Southeast Asia, in India, etc. Now, by reducing the size of the government and hopefully reducing the amounts of wastage that happens with bureaucracy, that might hopefully mean less taxes, which also would help, along with tariffs, to revive the economy. So I am saying that it sounds impossible. It is unbelievable to many, and I have debates with people around me on this. I'm one of the few people who actually believe that that may actually be possible, not because it seems to sound logical, but that we have seen in the first term of the Trump administration certain things that people didn't expect to happen, and they were able to pull it off by some mechanism that they were able to understand, and they're playing outside of the existing rules that the financial system and the economy currently functions.
Well, interesting. That's a lot to take on board. Can I just distill it down, though, for our viewers? When we look at the
Sure.
Aussie-listed gold companies, how are you anticipating they will be able to take advantage of this dynamic if it plays out as you anticipate? Because arguably their share prices have not necessarily moved in tandem with the price of gold.
Well, gold mining companies, if you're talking about them specifically, they have done very well in the last 2 years, especially the producers. They have recovered significantly, and they are at the point where it almost sounds scary for a gold enthusiast to be saying it on areas. I'm finding that some of them are starting to get to an overvalued position. Now, that doesn't mean that we should. I'm not panic selling at this moment, but I'm definitely looking more towards rotating my portfolio to the smaller developers and explorers. And the reason is that while gold has actually gone up a lot, and the gold to oil ratio, which is what I measure the how close to fair value or overvalue or undervalued these companies are, because gold mining companies, we're valuing them based on the margins, the profit margins that they generate, not so much just the price of gold. They're a business, they sell gold, but they also have to spend, and much of the expenditure comes down to diesel, running machinery, and even the salaries that they pay their staff. That's also follows the inflation rate, which is driven by the price of oil. So it's not so much that the Australian companies are undervalued and that they need to catch up in if the US economy does actually manage to pull off the seemingly impossible. I think the weaker US dollar could eventuate should the US economy actually achieve its aims. And that would make our commodities exports more competitive. And should oil continue to remain relatively low, because the US and the OPEC nations are going to compete against each other to keep their market share, I think there is a possibility that energy prices would actually remain at this range of about 55 to 70 US dollars a barrel. Anything higher will probably spur inflation, which is definitely not what the Trump administration would like, and also the Federal Reserve themselves, they really don't want inflation, but they also want to have the lever to pull on monetary policy to keep themselves relevant, because that's about the only tool that they currently have, controlling the currency supply, trying to control inflation. Usually I feel that they are behind the curve.
Okay, really interesting. Thank you. Thanks for joining us and to give us your thesis on gold and where it's headed. Brian Chu from the Australian Gold Fund.
Thank you.
Take care. All right, and we had a bit of M&A in the gold space as well with Genesis. Interesting times.
Thank you for watching my interview with Ausbiz. To learn more about our work, visit the Australian Gold Fund website. Also, check out Gold Hub Australia for live precious metals, price quotes, and insights. You can also sign up for our regular updates. And don't forget to visit the Ausbiz website. All our links are in the description. Please leave your comments and thoughts on where gold, silver, and the US dollar are heading below. Thank you very much. God bless.